Alright guys, what's going on? It's Josh again with another video, and I figured I'd talk in this accent because it seems like a lot of people like watching videos about cryptocurrency with people who have accents like this. So, let's get into it. I'm totally just kidding. What's going on, guys? So, I want to talk. I thought this would be a very important video. Cryptocurrency versus the stock market. And, you guys know me, I love both. I love the stock market. I love cryptocurrency. We kind of have a hate love relationship with cryptocurrency. I think everybody else does. That's what happens when you get a bear market every 2 years. So, stocks is like once every 10. It's easier to not get as pissed off and, show that undivided love and affection for. But I do want to talk about them. I think there's some cool differences, and I love them both. All jokes aside, I love cryptocurrency. Again, I always think it's great, especially if you guys are able to watch crypto and get into some of the developments and see how it's going to change over our years and be involved in it. It's the same thing with being involved in great companies and great stocks from the beginning. And I've talked about that in other videos. Go take a look at them. Stocks like Amazon, Netflix, even Apple, when you see, they just hit a trillion. So getting into it, before I do, make sure you guys drop a like on this video if you like it. Just show some love, and also check out the free stock trading course. So, go explore both if you're not into stocks. If you are into stocks and you're following the channel, definitely check that out. We got a free stock trading course, a free chat room, everything. It's completely free, so check it out. And, make sure you subscribe and turn on post notifications so you don't miss any of these videos. So, let's get into it. I have 10 reasons here I want to go over, and starting with the first one, undoubtedly stocks has more volume liquidity. And if you guys aren't familiar with the definition of liquidity, that means being able to get in and out of something without losing value. So stocks are really some of the best liquid assets you could buy. Apple, you could go buy it right now for like $208 a share, and if you wanted to sell it instantly and get your cash, you could sell it for 1 penny less. Not even a 1% of the company, your value. You're not going to lose much money buying an Apple, selling out, buying in, selling out. And, it holds its value fairly well. That's not the case with stuff like Bitcoin, which, and Bitcoin suffers in a lot of cryptocurrencies when they have lack of liquidity. Pretty much you could buy it at the bid or at the ask at a certain price, but if you wanted to sell it at the bid, there's going to be that large spread. So that's one part, but really the thing that makes stocks more superior in this case is simply the fact that the market isn't as it's not vulnerable as much to the liquidity. As you guys see here, the only reason why crypto is even going down right now, there is some good news, there's some bad news, but a big part is you lost a lot of the volume coming in where people are buying in and out. Fortunately, the stock market has that, and every single day there's at least $1 trillion being traded. And it's not necessarily saying, you might be asking, well, people aren't really as hyped on the stock market as they are, Bitcoin and crypto, or even at the peak. It's because the stock market has these high frequency traders. they have programs and banks that are just buying, selling every day. So it's kind of hyped up, by computers. So that's part of the regulation that comes with it. So there's that. And it's good and bad, but that's one of the big differences, and it's those underlying underpinnings. But essentially, there's just, even though the market caps are large, Bitcoin's a couple $100 billion, but that's just the size of one company in the stock market. So crypto is very, very small in terms, which is also good because, again, think of the future growth and as the Bitcoin or the blockchain develops. Next one is crypto is less regulated. So this is good and bad. Why this is good and bad is because it means, it's going to be easier for people to trade when it's not as regulated, but it's also, there's going to be less red tape that could prevent people from buying crappier assets. And it's just going to be pretty much the wild, wild west. This is good because you could find opportunity, whereas stocks is very, very regulated. It's very, very formal. There's a lot of consequences if you don't do things the right way. You guys even see how Elon Musk tweets out stuff, and, he creates a shitstorm for what he's done. So crypto is a lot less regulated, honestly, just not even comparable in terms of the scope of how much the stock market is more regulated. But again, like anything, the more regulation there is, the less it's harder for people to get into it. It's harder for people who have not built up themselves or are connected to profit in those industries. So that's where the stock market kind of loses to crypto, but it also, what it gains in security. I'm a big fan of regulation. Again, you're like, oh yeah, rich guy, of course you like regulation, but it's, I put a lot of money into it. I'm sure once you guys start getting bigger amounts in your crypto accounts, you're going to feel the same way. Same thing with your options. But at the end of the day, there's more opportunity with less regulation, whereas vice versa. Not just how it works. Think back in the day when there was, industrial revolutions and a lot of these companies came out, the internet, phone lines, all that stuff. When there was not less regulation, it was prone for bigger errors, bigger downfalls, but the people who came in there were able to get some awesome opportunities and really establish themselves. Next is crypto is emerging, stocks are developed. What that means is based on the scope, and you guys need to know this is the same formula people and investors look at when comparing emerging markets to developed markets. That's your country. Developed markets are like Germany, United States. China's pretty developed at this point, and then versus like countries like the Philippines, the middle places, a lot of places in the Middle East, Nigeria, South Africa, Turkey. Those places are emerging, means they're growing and they're smaller in scope, and they're not as, again, they don't have the same regulation, they don't have the same safety, they don't have the same pretty much, framework and foundation that's structurally sound and growth and development there. So why, what's the difference is, when it comes to investors, emerging markets provide higher returns at higher risk. Developed markets provide lower returns with lower risk. So that's what happens in the stock market. Once the developed markets like the US stock market hits a high, investors they want more than a couple percent for their money. They start to look towards emerging markets to get that added growth. A lot of companies on the stock market now, they're like Nike, their growth is tapped out domestically. The money's coming from emerging markets, and they're trying to go foreign into these markets that haven't developed to get those growth. So crypto is emerging, stocks are developed, and that should explain to you, stocks, you're going to make decent returns. Percentage wise, they're still good, but depending on who you are, they may not be good enough. Crypto is going to provide those emerging market returns, higher growth opportunity, and if something goes from emerging to developed, that's a great long-term investment for a lot of people. So moving on, stocks are less vulnerable to outside developments, and this is in line with the stocks have more liquidity and whatnot. But essentially, stocks are less prone to getting hit by news. One piece of news isn't going to affect the stock or the stock market as much as it would one currency. And even then, sadly, you have only one or two big currencies in crypto, Bitcoin and Ethereum. If one of those takes a hit, it brings down everything with it. So the stock market, like the S&P 500, it's a collection of 500 companies. The Dow's like 33 companies. You're not really, if one of them does bad, can it hurt like a percent or two? Yeah, even if they drop 10-20%, but it's still not going to bring everything down. It's not going to be as vulnerable to outside developments, but that's why people like it. It's safe, but at the cost of safety, they're giving up, the potential returns. Switch that around for Bitcoin. So that's one of the biggest differences too, is that Bitcoin, it's going to be more of a rocky road. Think again, an emerging market, something that's not really developed yet. A little bump is going to hurt it more than, a big SUV that's firmly planted. Moving on, stocks are easier to buy and there's less of a learning curve. And this is kind of weird because stocks are difficult. So, for the average American is not aware of how the stock market works, how to go buy shares, especially with the developments of apps and online trading and brokerages. People aren't aware of how easy it is to do it. But compare that to crypto, stocks is 1,000 times easier. You don't need to know as much. There's more information, publication from accredited sources. You don't go on YouTube and find a bunch of accent people and messing around with that. But at the end of the day, stocks is just a lot more covered, developed. It's easier to just fund a brokerage account, put money in and buy a stock than it is to understand cryptos, wallets, your wallet IDs, your public keys, private keys, hash rates, all that crap. The average person isn't going to know. And then now storing your investment, keeping it, it's just 10 times easier to do something on the stock market. Number 6, both of them are securities. That was through the SEC ruling, which is interesting because it's showing the developments of crypto, how Bitcoin and a lot of these cryptocurrencies are being viewed as an investment. A security represents, pretty much what a security is. It's an asset that can gain value without doing anything. So if you buy something and it can make money without you doing anything, exploiting it, doing any work, that's a security. And that's why, it's good for both of them. And that's what I'm saying. When you look at crypto in the stock market, it's just understanding where you want to put your money. Realistically, crypto is like the penny stocks of the stock market, but penny stocks are shit. I would actually be way more, I actually like Bitcoin. I actually like some cryptos, because there is underlying tech. And who knows, we could be getting fooled. That always is in the back of my mind. But, for the most part, they've done pretty well. So that is one thing that's kind of going good for both of them. Next, stocks have more reliable options. And I don't mean by options trading. I mean, if you want to trade your money, you could go into a plethora of many different stocks that are going to be, again, isolated from global market moves or from one company to the next. Whereas Bitcoin, a cryptocurrency, you really only have Bitcoin and Ethereum. You don't really have too many good options because there's not that much good tech that's coming out. At the end of the day, stocks, you are buying investments. That is what crypto is too. And you're putting money into an ICO, you're funding an investment. Quite frankly, there's just not that many good investments out there. Stocks, there's a lot of great companies, but again, compare how many companies and businesses exist versus how many are publicly traded. That's because the level of regulation, scrutiny, all that. You could see there's a lot more options, but it's still very minimal in the grand scope of things. Crypto, Bitcoin, all that, it's very, very limited. So stocks has more options, related to that, more ways to put your money in a safe place that's still going to give you a good return. Next, both of them have scams related to going to the moon and these little PR stunts. And that's where penny stocks come in, but other companies have been caught for this as well. 2001, the big bubble in 2001 that helped bring it down, that tech bubble, was the influx of accounting fraud that brought down many companies left and right, even down to Intel and Microsoft. They had issues, but then there was like the big ones like Enron, but those were big events that brought stocks down. But this has been going on for the age of time. This is why I don't like penny stocks. It's the same thing they do with these ICOs. They say, oh, we're going to do this. Here's our roadmap. We're going to get this company, da 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 da. They say they're going to do this, take your money and do this. And then they release, press releases, press release, but they never do it. But they just do that to keep getting the momentum up to raise money. Both crypto and stocks have this. It's just a matter of, you guys have to be smart enough to realize which is good, which is bad. But this is just this started in the stock market. It's been happening since the age of time. But understand, that's what an investment is. That's why the stock market has a bunch of disclosures everywhere, and they want to make it clear, hey, you're making an investment. You're not giving someone a loan. You give someone a loan, they have to pay you back. You give someone an investment, you're partnering up with them. It's like getting married, till death do us part, for richer or for poor. If that investment screws up, your money's gone with it. You have no reassurance of getting your money back. Obviously now there's, okay, well, you were duped, you were fraudly, misrepresented about the investment. Things weren't disclosed, it was fraudulent, whatever it may be. But again, there's no regulation in Bitcoin, but that stuff still happens on the stock market. They just slap a fancy disclaimer on it and they're saying, hey, you are an investor, this, we're saying we do not warrant the accuracy or guarantee any of these claims, yada, 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 boom. So pretty much everyone's going to get scammed if you're uneducated trying to invest, grow your money. That's simple as that. That exists in every financial market. Next, crypto has a bigger gap between insiders and outsiders. So this is very interesting because does this exist in the stock market? 1,000% yes. And this is the difference between people who are in the know, who work for these companies, who know people, who work at banks, who work at brokerages, who have just inside connections to get more information. And again, if you have that, you're steps ahead of your competition and other investors. And everybody knows that exists in the stock market. There's many laws and regulations and public oversight and governmental oversight to prevent that. However, when it comes to crypto, that gap is wide. It's very, very wide comparatively. But again, it exists in both, but the gap is slightly or much larger in crypto, where there's some people who know what's going to happen or have the insight on a company, the pre-sale, what's going to happen, when they're going to do what with their coins, tokens, shares, whatever it may be, and that gap is big, and that poses a big public risk. So finally, number 10, I hate this one because I love crypto, but it brings up a very thing. This is why I've talked down on forex brokers. Simply, crypto has no insurance. End of the day, when you deposit money into a crypto account, you do not get any FDIC, SPIC insurance. You do into a brokerage, you're deposited up to $250,000 if your money is taken wrongfully or lost at the fault of that bank or brokerage. Mt. Gox with Bitcoin and crypto showed that they got hacked. People were able to get their money back. They paid, thank God, and thank God Bitcoin ran up a ton like that. But at the end of the day, there's no insurance with that, so that is kind of sketchy. But at the end of the day, all of this stuff, is this to say, okay, well, crypto's sketchy? No, I love crypto. These are just some of the differences, and you are going to see areas over the next couple years. I'm firmly confident, as we're seeing how many jobs are getting created with crypto, how many people are being a part of crypto, how it's just getting so much notoriety. You are going to see these differences start to become similarities, even more and more, and people, the crypto industry will start to get a handle on this, but this is the work they got cut out for them. So I don't think it's a negative thing. I think it's just cool for you guys to understand the difference so you can know, well, which one is right for me? Which one should I get into? Should I trade stocks? Should I trade crypto? I think you should educate yourself on both because they're right up the same alley. They're just really, one is a very developed, mature market. One is brand new. And even as under being an investor, I invest in real estate, I invest in private equity, I don't always invest in publicly traded stuff. You guys are going to have to learn how to gauge the validity of an investment and gauge, is it really worthy and going to make money? And this is where you kind of got to put that to the test with Bitcoin and cryptocurrency. So I'll leave it at that. Hopefully you guys learned something. Smash the like button, drop me a comment. Love you all.